And welcome to this episode of the Capitalized Life and Retirement Show. I'm your host, Matthew Johnson, president and owner of Johnson Wealth and Income Management, a retirement income source located in Clear Lake, Humboldt, and Ankeny, Iowa, serving clients in northern Iowa and southern Minnesota. Well, how are you today? Hope you're doing well, taking a little bit of time for yourself. Welcome to today's program. If you're brand new to our program, aside from the welcome, I encourage you to stick around. Go to our website, johnsonwim.com. There's a wealth of financially relevant topics there. There's white papers on various different subjects. There's past YouTube videos, educational videos, as well as past radio shows. And if you're just that person that's thirsty for more, I encourage you to get a copy of my book, The Capitalized Retirement. It's available at all major book resellers, and it's something designed to give you a very, very clear view as to what it takes to successfully go from the accumulation stage of your life to the distribution stage of your life. So today, we're going to be discussing a topic that I guess is best described as being uncomfortable. This is a topic that has no doubt affected many of you. It is a topic that has affected me. This is something that if it comes into our life, it can financially wipe us out. It is something that is hard to discuss, it's hard to think about, but yet it has such a high statistical probability of affecting us that we can't ignore it. What could this thing be? Well, it's long-term care. And long-term care is one of those things that we just don't like to talk about, but we have to because it becomes a reality for so many people. So let's start out with some hard facts. Number one, statistically speaking, 1 in 2 of you are going to need long-term care. You've got about a 50% probability before you pass away of needing some sort of long-term care. That's a pretty high stat. Certainly higher than your house burning down, certainly higher than you getting into a car accident. I'm going to bring that back up a little bit later. Number 2, we have to be thinking about duration. What is the duration? Well, the average duration in a long-term care facility is approximately 2.5 years. Now, today we've got care that is so much better and so much more appropriate for the levels of aging that we go through as human beings. But what we're discussing that is so very, very expensive is certainly the skilled care. And that's not to diminish independent living or assisted living, because I know that those are expensive as well. But skilled care is kind of the big enchilada. That's the one that's generally costing a person anywhere from, $8,000 to $10,000 a month or more, depending upon where in the country you live. And so the question that I get asked as an advisor, as a fiduciary is, well, Matthew, when do I know that I need to start looking for long-term care insurance? Well, this is a set of opinions. That's all it is. It's nothing hard and fast. There's no rules here. But number one, the sooner, the earlier, the younger you can look for long-term care insurance, if you really feel led to, the better. But let's narrow the field when it comes to long-term care insurance. Number one, it is expensive. The average cost, depending upon your age and how healthy you are, should we say just ranges anywhere from $5,000 to $7,000 a year. That's expensive. And so if you're going to buy long-term care insurance, standalone coverage, it is quite the commitment. And certainly the more benefits you add on to the policy, well, the more expensive it's going to be. You're going to be paying for those bells and for those whistles. However, what we need to be thinking about is, do I really justify buying the long-term care insurance? And I think of this kind of in 3 buckets. And I know that this may be, for some of you, an area of disagreement, and that's okay. It's not to be offensive. It's not to give you an impression that you can't get long-term care if you fit in one of these buckets that I really don't think needs to get the long-term care protection. But 3 buckets. First bucket is people that have saved less than $250,000 in retirement savings. Now, here's the deal. When a person goes into the nursing home, we know you could be like my dad, and you could be there for 6 months before you pass away. We know that you could be like, Aunt Linda, who's been there for 6 years. The average stay, however, is 2.5. And when you think about long-term care insurance averaging, just for simple math, $10,000 a month, you're looking at completely wiping out a person's retirement savings. And what would happen if a person had $250,000 and then one of the spouses went into the nursing home? Forget 2. You're going to be in a position where within a very short period of time, there's probably going to be the need for Medicaid. And Medicaid is where the family turns to the state and says, we need help paying for the long-term care. And of course, that's a conversation in and of itself. We can talk about Medicaid and the Medicaid spend down process and the inventory of assets and so on and so forth. But the reality is that in my mind, if you have less than $250,000 of financial resources, you really technically are likely to go that direction if long-term care becomes a reality for you. The other bucket on the far end of the spectrum, on the other end of the spectrum, is going to be the individual that has, say, $1.5 million to $2 million or more. This individual, I feel as though they have the resources to be able to financially pay, self-pay for care. And so when you think about this, let's say that you've got a couple $1 million that you've worked hard to save, and let's say that it's making 5% in interest and dividends. That's $100,000. You've just covered 80% of the long-term care bill through interest and dividends. And for you to be able to come up with that little sliver of 20 grand out of your principal to be able to pay for that long-term care, well, you're not going to worry about running out of principal. However, the third bucket, the bucket that's in the middle, is the bucket I worry about. This is the individual that has, maybe $400,000 or $500,000, $600,000, and they feel pretty good about what they've worked hard to save. And they feel as though they could probably afford it. However, when you think about that kind of resource, you compare it to the cost of skilled care, all of a sudden you begin to realize that if long-term care became a reality for that person that said had $400,000, $500,000, $600,000, it could really hurt them. It could really hurt them. It's going to substantially diminish and utilize and use up the financial resources that they've worked hard to save. And what that means is, of course, there's going to be a lot less for the surviving spouse, if I can say that, to live on. And so this is the group of individuals that I really encourage them to look into standalone long-term care. Now, long-term care insurance or protection has changed as much as the long-term care units and facilities have. We're looking at a position where we can have long-term care protection through a standalone policy, just like we have homeowners insurance or we have automobile coverage. And as I said earlier, I'm going to circle back to that. Think about the possibility of you needing long-term care being about 50% compared to that chance of you totaling your car, your house burning down. It's a much higher probability. So long-term care insurance is one of those things that you absolutely want to begin investigating. And the sooner, the younger, the better. Because, of course, insurance companies are going to use your age. They're going to use whatever ailments you might have against you to charge you more. So, what about long-term care protection? Do we have to buy a standalone policy? And the answer is no, not at all. As I said earlier, things have developed, things have evolved. And so now we're in a position where we can buy hybrid life insurance policies. Friends, these are one of those products that I don't know why it wasn't invented so long ago. You see, one of the biggest contentions that people have about long-term care insurance is, I'm in a position, Matthew, where I could be paying this $5,000, $6,000, $7,000 every single year. What if I never go into the nursing home? What if I have a heart attack on the stoop of my house and I die? Look at all that money that's now gone. Well, you got a point. You have a valid point. And you see, the long-term care hybrid policies that provide life insurance if you die, but they provide long-term care money or benefits if you go into the nursing home, well, it answers that problem. You see, if you go into the nursing home and you utilize the benefits, great. You feel justified in spending the cost or the premium for that type of contract. However, if you don't go to the nursing home, you just keel over with that heart attack, well, guess what? Your family still gets a tax-free death benefit. Now, we have to go a step further as well. And that's where we look at annuities. Annuities exist in the world in which we can deposit money, we can make interest on our money, we can have protection for that principal, and yet if we go into the nursing home, it becomes a reality for us. Now that annuity contract, similar to the life insurance policy, is going to provide benefits. And yes, we are utilizing some of our own resources that we put into that annuity contract, but it's providing us benefits that we can utilize to cover that long-term care expense. So you see, friends, we're in a position where we have to make a decision, every single one of us. And many individuals in America, they really don't give it a second thought. They just say, well, if long-term care becomes a reality, so be it. And maybe you feel that way. And that's okay. That's your prerogative. But if you happen to fit in that middle bucket, that middle area where you realize that it's going to be a financial drain, you realize that you're probably going to be stuck, you'll never be able to get onto Medicaid, you're in a position where you want to be able to leave resources for the surviving spouse. You want to leave resources as a legacy and an inheritance to your kids and your grandkids. Friends, if you have invested your money properly for interest and dividend production, you're in that middle bucket. You have reasonably decent health. Long-term care protection is going to be one of the best investments you've ever made. And it's something that your interest and your dividends can pay for. Think about it for just a moment. If you've got $500,000 and you're producing 5%, it's $25,000 in interest and dividends. You're only taking a portion, just a portion, 20% of what you're making in interest and dividends, and utilizing that to pay for your long-term care policy. Whether it's life insurance, whether it's an annuity contract, whether it's standalone coverage, the possibilities are endless. But this is something that, as a fiduciary, I find to be very important and something that I encourage you to look into. We do such a good job of trying to invest properly. We do a good job of trying to do our estate planning. Well, you have to have assets to really justify the estate planning. So let's do what's right, and let's look into long-term care, whether that's through us or through some other source. Long-term care is one of the greatest and most financially prudent things that you can utilize as a tool to preserve your own assets, not only for yourself, but also for a surviving spouse, as well as for your family. So I know that this topic wasn't necessarily light and happy, But it's definitely a dose of reality, and it's something that all of us need to be considering and thinking about, because after all, we're all in this boat together. We're not getting any younger, we're getting older, and we know what generally lies in front of us, and we have to make provision for those things. This is looking ahead and making certain that we're anticipating what could happen to ourselves and to our spouse. I'm Matthew Johnson. Thank you for listening and watching, and remember, it's up to you to make today a great day.